Hello, everyone. Thank you for joining us for our Trailhead Thursday webinar. This week, we'll be talking about insurance strategies that work for advisors. And we have a great lineup for you today. I'll go over a few housekeeping items, and then I'm going to turn the program over to Daryl Seaton, our president. So we want to encourage you to ask questions. Do not use the chat window, use the Q&A window. That way, if we don't get to your questions, it can show up on our reporting and we can follow up with whatever answers we aren't able to get to. We try and do a tight 45-minute program so that people can schedule their meetings right at 2 o'clock if they have other things committed. You can choose to either do the Q&A or you could raise your hand if you'd like to speak live and in person, so to speak. We are recording. The recording will be emailed probably tomorrow from the Zoom platform, and it'll be available to both attendees and registrants. So, and then the link you use to register today will also take you to the on-demand version of the webinar. And so you're welcome to look that way. And of course, email me if you have any problems or questions, and I'll be sure and connect you with the right person. So with that being said, I'm going to turn the program over now. Daryl?
Thank you very much, Laura, and welcome to Sowell Insurance Services insurance webinar. We are really excited that you've all chosen to join us today. In fact, we had almost, not quite, but almost a record-breaking number of people register for this webinar. So there's clearly a ton of interest, and we couldn't be more excited about that. A little bit over a year ago, we launched Sowell Insurance Services, and we have made great progress in just over a year in what we set out to achieve in creating value from an insurance offering to our advisor community. And so we've got a wonderful lineup today. We'll get into all of that. But in the vein of that, what we wanted was an offering that was very consultative in how we work, which is how we believe advisors work, and launch it with full breadth of product and high payout and all of the bells and whistles that come with it, the technology, all of the underwriting support, case design in spades, you name it. We have done that, I think, very, very successfully. I couldn't be more happy with all of that. There's always room for improvement, but as I look back on other agencies I've launched before, we certainly have gotten off to a good start here. And we owe that, of course, to our amazing advisor community. And I'm glad today to be joined by Greg Brandt, who comes to us today, not from Florida, but from somewhere even better in Provence. He's on vacation and is taking time out of his vacation to join us. So thank you, Greg. We'll get to you more in a little bit for sure. And of course, here in Little Rock, we have JD. Is a part of our Trek Wealth Advisory team. And JD, look, we've journeyed with you for a long time. You do a great job as an advisor, but certainly in the insurance space, have a lot of experience, and we're looking forward to hearing from you. I don't know about all of you, but I love hearing from my fellow advisors and just listening to their experiences and what they've encountered here, especially with Sowell Insurance Services offerings. And then last but not least, we could not have accomplished what we did here at Sowell in our insurance offering without the amazing Sean Shea, who has an incredible background in insurance. I think I'm pretty sure, Sean, that I have forgotten way more than you than you could ever believe. But Sean knows everything about it way more than I do, is an expert. Look forward to even JD sharing about some of that in a little bit. But our partners in Griffin Insurance Partners, we couldn't be more happy with all the things that they've helped us to do. And what we were able to do from day one could not have been achieved without Griffin. And then behind them is Libra, which is the nation's largest independently owned IMO, FMO. So between the two, we have incredible star power and capability that if you have not taken advantage of that yet, hopefully this webinar will be an encouragement to you to do that. So we'll get into more of that. I want to turn it over to Sean as quickly as I can here, because we thought it would be helpful today for you not only to have exposure to more of Sowell Insurance Services and what we've done, but at the same time, what we wanted to do was kind of go to the well a little bit, right? As I call it, Sean. What's wrong with a couple good old-fashioned sales ideas, right? And so I think some of that's great. We want you to think about clients that might come to mind as Sean presents a couple ideas that we think would be helpful, as we think would be value add to clients potentially, and but also to give you a perspective on some things that are capable. And then we're going to end the time together hearing from Greg Brandt, who's used Sal Insurance Services a little bit differently, but as we intended, more from the digital side or access of the platform. And then JD as well, in terms of his experience accessing our case design through Griffin and what that's led to for him, and hear that experience as well. As always, I know Laura mentioned it, but if you have questions, put them in the Q&A. I have a challenge for you, but also a request, because Sean is feeling a little bit under the weather. You might not know it, but Sean, we appreciate you joining us, even though you do feel a little under the weather. But my challenge always with an expert like Sean is I challenge you to stump the panel. In other words, bring it on. I'd love to see a question that Sean can't answer. I haven't seen one yet, but please put your questions in the Q&A, regardless of what they are. We'll try to get to them live here. If there's too many, we'll answer some just back in the chat so everybody can see it as well. But without further ado, thank you, Sean, for being with us today. And maybe I'll let you say a little bit about your background and all that, and then we can dive into the material. So thanks again, everybody, for joining us.
I appreciate it. Thanks for the warm welcome. What Daryl's alluding to is I tested positive for COVID this morning, so I'm a little duller than usual. My jokes may not be as funny. 35 years in the insurance space, providing solutions to agents and advisors. The experience there lends us to know a lot of what's happened, the history, how we've gotten to the current market environment and where we are. So a bunch of my team members are on the call today as well. But hopefully we can give you a couple of strategies today, some solutions for your clients, and hopefully be able to provide something of value. Today's presentation is primarily talking about, I'm going to share my screen here. It's talking about long-term care and using qualified assets to fund that long-term care. And the reason we chose using qualified assets is because for most advisors, that's the largest block of assets for them. It's a source of funds to be able to provide for retirement, obviously. But in this case, we're going to show you two strategies. The first strategy is mostly for a client that's probably south of 2.5 or 3 million in total assets. These are the folks that are actively looking for long-term care coverage in one way, shape, or form, because their fear is that they're going to burn through those assets faster than they anticipated, and then they definitely want to provide some coverage. The second iteration is going to talk about a client that's probably worth a little bit north of 4 or 5 million, and they're going to have a little bit different strategy. So I'm going to jump right into it. So so again, as I said, using IRA distributions to fund long-term care, and these slides will be provided at the end. Laura will send them out to everybody. So what we have here is female client, married, non-smoker, $1 million in total retirement portfolio, 600,000 in qualified IRA. This particular scenario is focusing on someone who's 60 years old. What we see a lot of times is that folks are going out looking for long-term care coverage north of 65 and closer to 70. So there's a big difference between securing it earlier than later. The history of the long-term care insurance industry is that there is only one carrier left in the industry that provides traditional long-term care. All of the other types of long-term care today are called asset-based long-term care. So it's taking either a lump sum asset or a stream of premium payments and paying it into a policy. We see a lot of asset transfer here in this space. The downfall there is that we currently can't move qualified assets. So what we're going to talk about today is moving those assets as a stream of payments. But I'll jump right into it. So in this strategy, we're going to take $100,000 from the IRA. We're going to purchase a SPIA, single premium immediate annuity. All of us on the call know what a SPIA is. I would tell you that if you use the word SPIA with a client, they're going to have any idea what you're talking about. So it would make a little bit of sense to actually say the word single premium immediate annuity. We're going to choose a period certain here. In this case, the period certain is important because we want to be able to pay at least 10 years worth of premium. You could also choose a lifetime period certain, which means it'll be guaranteed to pay for 10 years, but the premiums will continue. It would just give you more long-term care benefits. We tend to see that the higher amount of premium going in over those 10 years is enough to pay up the long-term care coverage. So we're good there. In this particular scenario, we're not going to pay the tax that's due from the funds that we're distributing. We're going to suggest that those be paid with outside funds. In our second scenario, we're going to take a different strategy. So simple transaction here. Allocate the $100,000 from the IRA, purchase the SPIA. In this case, it's going to generate $12,332 for 10 years. We're going to use that money to purchase a long-term care policy. So what we're going to do here, what's important here is that we're taking, taxable assets, but when we convert this over to the long-term care portion, those assets that are paying for long-term care don't create a taxable event. And they're designed to be able to help not just provide the long-term care coverage, but a lot of the carriers have lots of other little concierge services, bed reservations, helping the folks that need to be in a nursing home, helping provide for the policies that provide for assisted living programs. So there are lots of steps involved in this. It isn't just simple as buying the coverage and waiting to use it. So interacting with a member of our team and picking which strategy works best for the clients. Some clients say, I never want to go into a nursing home. I only want to be home here. So we adjust the coverage and make sure the coverage is going to be able to be used. There are a couple of carriers that allow for family members to be the person providing the care. That isn't universal across the universe of carriers. So you definitely want to interact with us and let us provide those details for you. So here we're talking about obviously someone that's 60, so we're avoiding the penalty of being 59 and a half. Again, we're providing it in this particular scenario. We're using Nationwide's Care Matters product. There are 4 or 5 similar products out there. Nationwide does a really, really good job of providing a lot of information around the product. Their literature is very strong. They also have good name and brand recognition with the clients. So why would we do this? If you don't, traditionally long-term care provides a pool of money. The long-term care coverage provides a pool of money. So if we're going to put $100,000 in, we can expect somewhere between $200,000 and $300,000 of total assets to be used for long-term care. Now, for some folks in the Northeast, that's just not enough money. For folks down in Florida, it might be okay. So I would tell you that we can provide to you the average cost of nursing home in each state across the United States. In the Northeast, it's $300 to $400 a day to be in a nursing home. And, people want to be where their families are. So you would think, well, why wouldn't everybody just go south? Because people want to be around their loved ones and their loved ones want to be able to come and visit them. We've done many, many seminars over the years related to long-term care. And, we would open the seminars back then with just a very simple question was, how many people can't sleep their first night in a hotel? And half the room would raise their hands. And we would say, well, just imagine you can't check out. And that kind of rings true. You providing coverage for long-term care does nothing more than provide options. You're not going to have to provide on any state or federal assistance. You're going to be able to either use your current assets or be able to leverage your assets to provide this type of coverage. Again, this is just a graph laying out the program and how it would work. And I'm going to move along here. So again, the strategy here is transferring money into a SPIA, single premium income annuity. SPIA pays a 10-year guaranteed premium out. That money pays into the long-term care policy. There is a portion of life insurance inside of all long-term care policies. This strategy that we're talking about is a little bit more long-term care centered and life insurance as a secondary strategy. What we're going to switch over to now is a little bit different strategy. I'm going to go ahead here. Okay. All right. So who are we looking for? 60 to 75, significant IRA, but doesn't need it for income. One of the case that we're going to go into here in a minute is an actual real case study of a live case. It's a situation where the client basically said, look, I want this block of money, this $1 million to be divided up amongst my children. It was qualified money. So we had a bit of a challenge. We wanted to be able to provide some legacy, but also make sure that that money wouldn't have to be needed for other purposes, particularly long-term care. The reason we use a SPIA is we don't want any market fluctuations in that money coming out, and we don't want to have the premium moving up and down. These strategies and these policies, the premiums are guaranteed. They're all designed in a short pay strategy, meaning most companies, you know, if you have a 20-year premium, there's always a chance for that premium to go up. These don't have that problem. They're all guaranteed premiums. Okay, so this is a little bit different case study. So this is going to take someone who's 72. This was a woman that had come to meet with one of the advisors. $1.8 million in an IRA and $2.2 million in other assets. Traditionally, someone in the $4 to $5 million range could self-insure. They could use their own assets and don't have, because you have to qualify for long-term care. In her particular situation, she was in good health, so that kind of helped the scenario. But what she really wanted to do here is she wanted to transfer $1 million of her IRA assets to her children. The children were in all different stages of life. One was a doctor, one was an attorney. Two kind of needed money early on, immediately. So what we were able to do here is, in this case, we're talking about one SPIA. We actually issued 4 separate SPIAs because she didn't want each of the children to really know what the other person was doing. Those SPIAs distributed $103,000 of taxable income. In this scenario, we paid the tax from the distribution. So we bought a $1.6 million life insurance contract with a $1 million long-term care rider, meaning $1 million of the $1.6 million was going to be available for long-term care. One of the other reasons we use SPIA is that it's a guaranteed stream of income. In this scenario, we actually chose SPIA with a lifetime continuation. What happened here was, we didn't plan this to happen, but in the 24th month of the transaction, this woman passed away. So what ended up happening is the SPIAs continued to pay for the 10-year certain. So we distributed the $1 million plus a little bit, and we distributed $1.65 million of life insurance. The key word in this transaction and the scenario is the word legacy. So when you'll notice in your clients that you're talking to, if they have a standing in the community, or there's someone of substance or means, the word legacy is used a lot. And this transaction here, the solution for this client, was able to give the client what they really wanted. And she really felt good about the transaction. What happened is all 4 of these recipients continued to work with that advisor, and each of them had their own assets. So it ended up being about $12 million in total of assets under management across the 4 children. So I tend to talk a little fast. Today I'm about 80% of my usual jovial self. But here's what I would say. Regardless of the client and the situation, interact with us, interact with a member of my team. Just walk through a conversation that talks about what you think you have or what the scenario is. All of this always starts with a blank sheet of paper. Just coming up with a solution that works for the client, but works in tandem with all of the other things that you've done. So learning about what you've done for the client already helps us determine what we should be able to present. So this is, again, just another walkthrough of how you would actually get there. So I'm going to stop sharing here, and I'm sure Laura's going to tell me if I needed to continue to do that or not. So can we,
Yeah, if you
Cheryl?
don't mind sharing your screen, we have slides for Q&A and for Greg and JD.
I knew that. Don't remember it, but I knew it. Sorry.
No
That's
problem.
great.
There we go.
Thank you for sharing both of those strategies, Sean. 2 excellent ideas. Maybe you've heard of those before. Maybe you haven't. Maybe it spurs some questions, but I do encourage you to reach out to our Sowell Insurance Services team. Again, we're powered by Griffin Distribution Partners, and I think you will find a depth of knowledge there that can help with any client situation that you might think of, need help with. There's certainly a breadth of things that we can get into and would love to help serve you with. So without further ado, I would love to invite back here Greg Brandt to start with. And Greg, as I mentioned, is not in Florida where he normally is a superstar advisor, but he's on vacation in Provence. I don't want to steal all of it, except for to say I had to counter your Provence with a beautiful Napa Valley cab because, well, you know, we can't have the French have all the fun, but you are in a beautiful place with beautiful wine, beautiful food, and beautiful people. But we're glad to have you join us today, Greg. So please feel free to, first of all, just introduce yourself. And then I'd love for you to share your experience on our Sowell Insurance Services platform. Specifically, Greg, I know you've been using the technology quite a bit as you do in other parts of your business, but you certainly have been dropping some tickets in there. In fact, quite a bit every month. And so if you wouldn't just share, you know, after you introduce yourself, your experience in using that part of our platform, I think that would be helpful to our advisor community and certainly help them understand how that's worked for you. So thanks for joining us today, Greg.
Thank you, Daryl. So like Daryl said, my name is Greg Brandt. I am a wealth advisor with Barclay Breland Family Office in Jupiter, Florida. I am on vacation right now, but definitely wanted to make sure to carve out some time to attend this because, you know, this is very important stuff, really helps drive business moving forward. And so I joined Sowell about 14 months ago. And when I was going through the process of onboarding with Evan, I expressed to him how important being able to offer insurance strategies to my clients and my prospective clients is. And so Evan linked me up with Frank Johnson at Griffin, who's a member of Sean's team. And Frank got me all set up on the platform, walked me through everything. And I got to tell you, it's very intuitive, easy to use. I can run a term life insurance quote for a client literally in the matter of a minute. Prints out a nice report, shows the client every carrier, every premium option between monthly, quarterly, semi-annual, annual, whatever it may be, and be able to present that to somebody. And it's always, I can always tell it's a bit of a breath of fresh air whenever I do print out those lists that the Griffin platform provides you, because they don't feel like they're being sold a product. You know, like there's a lot of life insurance salespeople out there just sell one company. And when you show a client like, hey, here's the 30 carriers for this scenario, here's the cheapest one, A+ rated, whatever it may be, they kind of put their guard down a little bit and they realize that you're not just trying to sell them something. And then if the client decides to move forward with the quote, Griffin's platform also has an application process. It's called submitting a drop ticket that Daryl was alluding to, where I just go in, enter all the client's information, and submit it into the platform there, which then Griffin sends over to the carrier, and then the carrier sends the application over to the client to complete. So it's all electronic. There's no paper forms, which if you've ever done paper forms for insurance, you know how painful that can be. And it's very simple. So highly recommend, if you haven't had a chance to utilize the Griffin platform yet, to get on there, get with a member of the team to show you the ropes. Also, I'm happy to answer any questions for anybody who has about that. The last thing I wanted to mention is just the team at Griffin. They're fantastic to deal with. There's 3 individuals who I primarily deal with on a day-to-day basis over there. Amy Thrall, she's kind of my day-to-day point of contact over there, where every week, any case that I have outstanding, Amy sends me an email about where the case is, any outstanding items, any missing information. It's huge. It makes sure nothing slips through the cracks and keeps business driving forward. So she's a huge help. I mentioned Frank Johnson earlier. Frank definitely helps me with a lot of more of the complex planning that I try to do. So similar to what Sean was talking about earlier, but this is not with an annuity. I've run a couple IUL illustrations with some long-term care rider options. And Frank has been able to, I'll send him over an email with the information about the client and what I'm looking for. He gets back to me very quickly with a handful of different options, different variations of things to look at and think about. And then I put that in my planning software, present it to the client and be like, hey, you can self-insure for long-term care, or you can look at this example. And when you actually put it into the planning software and it spits out a probability success number, and it shows, hey, you're better off in retirement with the long-term care policy, it really resonates with people. So that's definitely a big help with Frank. And then the last thing is, I don't know if anybody has ever had to do contracting before, but it's painful. And Griffin has an individual over there, name is Major Shear. He does all the contracting. He gets it all set up. He sends me an email with a link that I go click on and make sure everything's correct in the system and submit it. So it's extremely easy from platform, dealing with the team. I highly recommend using them. They definitely help drive business forward and give us another option, if you're not using insurance for clients, to be able to offer another avenue to your clients to help, retain your clients. So definitely recommend using them, and happy to answer any questions that anybody has in the Q&A section.
Yeah, thank you, Greg. That was an excellent rundown. And I, for all of you on here as well, obviously have a deep experience knowledge myself, and I'm eating my own cooking, our own cooking here. So I would say kudos to all 3 of those people that you mentioned as well, Greg. So I'm glad that you brought them up, because they've been incredibly helpful in so many different ways, making it easier to do the insurance work. We're all busy doing all the other advisory work we do for clients, and we know today we're being asked and expected by clients to do more and more to be competitive. And so from the Sowell and management side, we want to make sure that we're keeping you on that cutting edge. And in the same vein that we provide our advisory service side, we want to provide all these other things as well, obviously insurance, with the high service level that you expect from our platform, which our partners at Griffin, everything we do at Sowell, we're always punching above our weight class, because Bill Sowell has done such a great job instilling a strong DNA in partnership. And so that is showing through in our relationship with Griffin distribution partners as well as Libra, so that we're able to provide to you what we do. But we want it to be high service, high touch. And so I'm glad that you brought that up. as folks are thinking of questions there for Greg, we'll go ahead and maybe Frank, I think you're on the webinar. If you wouldn't mind getting ready to maybe introduce yourself, or Major, if you're on, you guys are certainly welcome to come in, and we'd love to have you introduce yourself as well. Since I saw your names in there, might be helpful. But while you're preparing for that, if we could get JD, I'll invite you back on here, JD. And there he is. So I invited JD. He has a tremendous amount of insurance experience. And when I first started talking to you about Sowell Insurance Services, you were like, well, listen, I got a guy, because that's what you have in insurance. I got a guy out in California. And interestingly enough, I happen to know that guy pretty well since I came from the Sacramento area. And I said, yeah, but I got a guy, and I think you just need to talk to my guy and just see if you don't find value. And of course, I knew that you would, just given the experience I've had with Sean Shea. And Sean, I saw you jump on there again, but if you wouldn't mind jumping on, because you're a big part of this kind of this story with JD. But JD, if you wouldn't mind introducing yourself, and then just sharing, you've had some really great experiences with our team, and I think some really unique things that people may not know are possible. And I think you and Sean can talk about that if you would. But JD, thanks for joining us today.
Yeah, absolutely. Thank you. And I did have a guy, but now I have a different guy, and I like your guy better. So
we're pretty partial to him.
It's been absolutely wonderful having the opportunity to meet Sean and to work with Amy and Frank and Teresa and Major and David, and even met Noah yesterday. And for me, that's been extremely important. Because when I turn to this area, I need expert knowledge, and I need somebody that can relate to the clients and understand their story and talk to them. It kind of takes it off of my shoulders. It's a great opportunity for me to kind of play tag, be part of a team, and give it over to Sean and his guys, and they take it from there. And it kind of takes it kind of takes what sometimes can be very personally sensitive in dealing with certain clients, especially if you're dealing with any friends or family or somebody you've worked with for a long time. And it kind of says, let me bring this other professional who has expert knowledge and experience into the situation. So that's kind of how it's worked for me. So I think one of the situations that we had was working with a person who was kind of becoming a client of mine on the 401k side and on the investing side. He's been running he started his own company about 20 years ago. It was a small technology company. And he's now in his young to mid 60s, and he doesn't have any kind of retirement or life insurance. And so for me, the opportunity, first of all, it took a little bit just to get him to the threshold of wanting to say, yeah, I'd like to discuss that. I don't know. I think it was just kind of out of his realm for the most part. So once I was finally able to get him to do a Zoom meeting with Sean, and once we got to that point, it kind of shifted into a whole separate gear. And I will throw this out. The idea of doing these video meetings, at first, I really didn't care for it that much. But what I've found now is it's just so very easy to get clients on and get them into a meeting. You're not trying to set something up. We don't have to be there. It's just, hey, if you're available, let's get this done. We'll set aside 15 minutes, which we know is going to be 30 or 45, if not a little bit longer, but to get them to the table to have the discussion. So in this person's case, what we were looking at was a way to create some life insurance, some death benefit, but also to create a retirement plan for him. So the proposal that we came up with, and he has the ability now with his company to put aside approximately $10,000 a month or maybe $8,000 a month. But what we were looking at was, and Sean came up with this, was to fund approximately $100,000 a year for 10 years. So $1 million in, and then for the next 20 years to be able to take out almost around twice that much, yet on a tax-free basis. And so that was going to be his retirement plan. Additionally, that would include a certain amount of death benefit, which would cover him after the first premium payment was made. A few things that we ran into. One, while I knew this person on a friendly basis, his personality, once we started discussing business, became a little bit challenging, I would say. I don't know how much of that was ego. I'm not sure what it was, but it was kind of interesting for me to run into that. The second part was, once we got into the medical history, we found out there were some things in the medical records that we had not been made previously aware of. One of those things was, and I find it very interesting. Absolutely no nicotine, no smoking, no nicotine. Well, we finally get the medical back and it's got nicotine all over it. And so I'm having a conversation with this person, and because he's a friend, I'm also having to be a little bit careful to manage the process and not really just to upset him. And I said, well, I'm just telling you, the medical shows this, and do you use maybe a patch or chew on the Zen? Oh yeah, I use Zen. Oh yeah, I use those all the time. So that was a problem, because we had already gone to the insurance community and said this is what we think, and it was different than what came back in actuality. So that doesn't really set us out on a good foot. So once we got through that, we then ran into another slight issue, which was the marker for those beverages that Daryl was talking about earlier. The marker for that showed up in the medical. And so that was something else that we kind of ran into that we had to get over the hurdle. So through working with Sean and his team, what they were able to do was, and working with Lincoln, they were able to go back and eventually get the entire policy secured with Lincoln, and got it repriced to operate as if it were a standard offer. And Sean, you can add to that, but I think it was we didn't have near the death benefit that we initially thought we might have, but we were still going to be able to provide the tax-free cash flows for retirement in the years to follow.
Yeah, we basically, he was initially rejected because of the alcohol marker. It takes a lot of, Daryl had a bottle of wine up there. It takes a lot of wine to trip an alcohol marker. Usually it's hard liquor. We were able to get it to price. We dropped the death benefit, I think about 10 or 12%, but the distributions remained constant. So it was a lot of work, and he was not, I don't know that he was ever really forthcoming in the information. It was kind of like chasing him around a circle, denying everything we said that we found, but we still were able to get him an offer. So in the end, it worked.
That's great. Yeah, those are unique situations for sure. And I thought it was really interesting, again, just to showcase capability, but that comes from experience and knowledge that we have on the team here, obviously with Sean, and yeah, of course, JD and his experience in managing and navigating that, right, with a client and friend is always a challenge. But when you have the expertise behind it and are still able to produce a positive result, that can help, right? And that certainly did in this situation. So appreciate you sharing that as well. I know, JD, you mentioned, as well as Greg did, you both mentioned Frank Johnson. And I saw that he has joined here on the webinar. Frank, maybe if you wouldn't mind just introducing yourself to everybody on the webinar here, and the role that you play within the team, and just so they can see you, since they've heard your name, now they can put a face with it.
I appreciate it. Thanks, Daryl. Afternoon, everybody. Appreciate your time. Daryl, Greg, JD, really appreciate all the kind words that you guys had to say about us as well. We try. We're glad you're happy. We're glad we're doing a good job. That's what we intend to do, and that's what we hope to do here in the future as well. I mean, I think JD nailed it. I mean, if you're going to ask what my role is and what we try to do here, first of all, I'm up in New York. I run the New York office for the team. But JD kind of nailed it, and Greg did as well. We try to do the intake in the process for you. So as soon as you come on with Sowell, as soon as you have a case you're working on, we're trying to make the process for you as easy as possible. We know this may not be your primary focus inside your business. So we try to make it as easy and painless as we possibly can, and that's our primary objective. So I try to be the buffer on the front end as often as I can. So kind of get you engaged with the team, Major in licensing, Amy on the case management side. Behind the curtain too, I think it's worth mentioning when you send something to case design, or you guys send us a case to work on, we send it over to the case design team, which is David Hansen in the background. We have David chained to a desk down in Raleigh somewhere, and he's just sitting there running illustrations all day long, and he does a fantastic job for it. So a lot of those emails that come back that are really well thought out and well crafted, that's Sean and I doing the input on the front side after having a conversation with you and the team, and then kind of directing David on what we're looking for. And then David comes back with a couple of really creative scenarios, and then we put it out there all together kind of as a team effort. So that's really it. I try to quarterback the front end of it, try to make the process as easy and painless as possible, and then try to filter the incoming information to help to get you to the best design and painless experience for you and your client, and hopefully close the business. So that's what we do on our end. So I'm kind of the quarterback, and then when things get a little more advanced, then we kind of lean into the team, and we bring Sean in. We bring in folks from the carrier side to kind of go deeper into the scenario and get what we need to get. But it's a team effort.
Perfect. Well, thank you very much, Frank. That was a good overview of your role and what you do. You've been extremely helpful to me, so thank you as well.
My pleasure. Thank you.
We do have a question here from one of our advisors, and I was fortunate enough to visit with his advisor yesterday in our office. They came into Little Rock for a visit. But the question is, and this is going to be for you, Sean, can you provide more details on the retirement insurance plan that was described? And I think they're asking, like, what was the product structure? I don't know if you could speak to that at all. You're on mute, Sean.
Yeah, I was talking to myself, having a whole conversation. Thanks, Joyce. Thanks for the question. So in the strategy that we created for this individual, he initially wanted to put away $10,000 a month for 10 years, wait 5 years, and then start distributing. So we used an index universal life policy. You hear this called out in the world, a LERP. You can hear the word SERP, Supplemental Executive Retirement Plan. But basically what we're doing is we're leveraging the ability for life insurance to grow on a deferred basis, and using the strategies internally, using loans to distribute the money and not ever pay tax on that income. I will tell you that those live in the $10,000 a month space, and they live in the $150,000 a month space. So we see scenarios where an executive who's making $1 million a year has run out of every opportunity to fund anything related to retirement. His 401k is maxed. He has plans at his business, and he needs another place to accumulate funds and distribute them on a tax deferred basis. So it may be the next call we would do something that just talks about this strategy. There's lots of different flavors to it. We add long-term care riders, different other components. We can have the company pay the premium using split dollar. So there's it's a lot of advanced strategies can be linked to that one concept.
Perfect. Thank you, Sean. And keep the questions coming. If there's other questions here, please put them in the Q&A section at the bottom of your screen there. That'd be helpful. I want to quickly bring in Randy Hebert from our team as well. If Randy, you could join us and just introduce yourself and share a little bit about your role as well, that would be helpful as we look at other questions coming in here, and you get prepared on that. That'd be great.
Okay, yes, I'm happy to. I'm not able to get on video because I'm
no
traveling.
problem.
So sorry about
Voice
that.
is perfect.
Okay, good. Yeah, so I've been 20 years in the business. I'm a former PGA golf pro and have a lot of connections through my past life, and absolutely love this business. My role as a senior vice president with Griffin, and I work with a lot of advisors. Matter of fact, I'm on the way back to the office now from presenting a LERP with another advisor. This person has a max 401k, maxed out pretty much everything they can, and they want to have more tax deferral. So what Sean just talked about is a real thing, and it happens. We discuss it a lot, and it's a valuable part of someone's plan.
Perfect. Well, thanks for joining us as well, Randy, while you're traveling. I know we're at time, and so I just want to be respectful of everybody's time. And I certainly want to say thank you to Greg Brandt for sharing part of your vacation with us. We appreciate you so much. Please drink some wonderful wine for me and take in the beautiful smell of lavender. It's really beautiful this time of year for sure. And JD, thanks for sharing your experience as well. As always, Laura, thank you for all the work that you do to help us pull off these really successful webinars. We obviously could never do it without you, and we appreciate you prodding us along. It was great to have Frank and Randy join us from our partners at Griffin Distribution. And then last but not least, Sean, we are very, very, very grateful for you, for Teresa, and for the team that you've put together that help power our insurance solutions for our advisors at Sowell Management. We could not have done what we've done in this first year. I know we've had good success already. We're growing it. Just for everybody's knowledge, we actually have started to recruit producers that are insurance first producers, and we're going to teach them how to do the advisory side. And so that's hearkening back to my old days at New York Life, where I spent 13 years. Sean spent 13 years at Prudential. And so you know that system very well. So we're very excited about having those kinds of folks join our ranks as well. And then for the rest of you, I know a lot of you on this webinar have utilized other FMOs, IMOs, or GAs. And I just encourage you, put one case through us, right? If you do nothing else, just do it. Look, I don't love toe dips because I'm sort of an all in or all out guy, but like do a toe dip, like give us a piece of business and give us a shot. I'd be remiss if I didn't at least ask for your business. So I think you'll be you'll be wonderfully surprised by the team, the scope that we have. And again, life insurance, annuities, disability, long-term care, the 4 areas we work very consultatively. It's not going to be high pressure sales. And we have all the technology to do with it. We'll take care of the contracting and licensing for you. All those pieces, we're here to serve you and make it easy to bring this value to your clients. If you're on this call as an advisor and you're doing financial planning and not taking care of the insurance business, by the way, we do have we do have advisors who maintain the full fiduciary duty, which means they don't sell for commission, but they have clients that needed specific things. They turned it over to us and we wrote the cases for them. And so that they could maintain a full fiduciary status. And we've been able to take care of that as well. So lots of opportunities for you all. Thank you for joining us today. We appreciate you all very much, and have a great rest of your afternoon.
Thank you, Darrell. Appreciate it.
Bye.
Bye.